Hi, everyone, and welcome back to the King Operating Oil and Gas Rundown Live here with us. I am Rachel Griffith, the Senior Vice President here at King Operating. And today, of course, I have a panel of gentlemen here that are also going to be talking and sharing about everything related to oil and gas. We're going to talk about what's happening in the market. We're going to talk a little bit about engineering and some of the projects we're working on. So thank you for joining us. And gentlemen, thank you for being with me today.
Thank you, Rachel.
Thank you, Rachel.
Yeah.
Absolutely. Of course, we've got our founder and CEO with us today, Jay Young, our COO, Steve Mullican, and we've got our EVP of Engineering and Operations, Kelly Duncan. So welcome, guys. And today I want to start, Jay. I mean, finally, we see some bump in commodity prices, which I say finally because you've done interview after interview trying to unpack and explain to people just what's been going on in the market. So we're finally reaching that, looking at around $80 a barrel again. What's happening? What's driving prices? What are you seeing?
Yeah, Rachel's good point. And, before the war, I was talking about prices that would be going up in the summertime without the war, without the disruption. Just imagine how much real distraction there is and where prices are today and where they should be. I feel like they should be a lot higher than they are right now. I mean, at $80 a barrel, that's what I felt like they were going to be without a war because of a lot of different factors going into the summertime, which was demand was going to go up, rig count was down, and there was just a lot of factors that were going into seeing a huge, I don't say huge, but a supply that was not going to be there for the summertime. And when you don't have that supply in there, you're going to see prices go up. This is cyclical like it has been for the 35 years that I've been in the upstream business and 4 generations. But it's like this business is cyclical based on how much oil and gas is produced and how much is consumed. And I was thinking that we're going to be at this $80 before, but now with a lot of the shut-ins around the world, with the Strait of Hormuz, with the Persian Gulf wells that are being shut in voluntarily because they don't have anywhere to store it, or by drones or missiles or war, whatever, there is so much oil being taken off the market right now. And there's been reportedly a billion barrels of oil that has been shut down and not produced because of all the factors with the Strait of Hormuz and the transportation going through there. 20% of our daily oil, 20 million barrels a day, goes through this strait. And when it's shut down and zero oil can go through, then people have nowhere to go with it, so they shut their wells in. Or there's been a lot of bombs going off, a lot of drones, and a lot of refineries going out. So there's been so much disruption that I feel like that oil should be a lot higher than this, but it isn't. So we're good. We're good with $80 oil, just like Billy Bob said on Landman. We're good at $80, and we'll continue to drill wells and put wells online at these prices for our investors. And we're looking at some really good months ahead for our investors. And I don't know when we're going to come out of a bottom of $80 a barrel. I mean, I feel like that we're going to be at a high, at 100 or 120 or whatever the case may be. I don't know that, and I don't know what Trump's going to do and who's messing with these markets, which I feel like that somebody is. But I do know one thing. I do know that we're not going to go below $80 a barrel anytime soon, and it should be there. And if those prices, our clients are going to be printing money, as Billy Bob said, right?
Printing money, I love that. I mean, Jay, the U.S. has, in the last 20 years become really one of the world's largest oil producers. So how much protection, does that really provide against global supply shock?
Yeah, I mean, it does make a huge difference when the Permian Basin and New Mexico and the West Texas Permian Basin, New Mexico. I was watching a video about the New Mexico right now and what's going on with it. But we started going horizontal and we started fracking horizontal wells a few about 10, maybe 15, less than 15 years ago. And our production has gone from 1 million barrels of oil a day in the Permian to over 6 million barrels a day. When you're looking at a country that needs, 20 million barrels a day, that's a huge difference in what we produce and what we consume, which is great because we're not so dependent on the OPEC plus, all of the different companies or countries out there today that they used it against us. I mean, like they would say, okay, we'll put some oil in the market to lower prices, and they did, or they would take it off to raise the prices. And we're not as dependent on them as we were, before that we started going horizontal in the Permian Basin and started producing 7 million barrels a day, which is what we're doing today. Matter of fact, I mean, there should be a lot of people that thank goodness for the Eagle Ford, the Bakken, and the Permian Basin. Those three basins right now make up, at least more than half of our production right now. And we would be at, I don't know where we'd be. I need an economist to pipe in on this one, but I feel like that if we did not have those three basins right now producing, 7-8 million barrels of our 13 million barrels that we produce right now, oil prices in the United States would be a lot higher, $150, $200 a barrel, or we'd all be riding horses to work. And we'd have to get some feed, everything would look different around this country because we would have prices at such a high rate that our demand would have to go the other direction. So I don't know what that looked like, but I do know one thing. We do need to thank, producers in the United States, the Continental Resources, Harold Hamm, the Aubrey McClendons, the Permian Basin, Autry Stevens, those kind of guys for going out there and doing what they're doing right now for producing oil in the United States, because it has made a big difference for the world, and also especially for the United States.
Yeah, I can imagine. So, I mean, you just think about, I don't have the exact numbers of how much we've been exporting through the Gulf since this started, but I mean, it's an incredible amount. I know the strategic reserves are dwindling down there, but it is amazing to think of what has changed in this country in 20 years, what it would have looked like before that if we were in this situation. Be far different. We probably have a nice carpool or something set up for King, or maybe we'd all be getting the horses together, or something much more economical. Steve likes that. Steve, you ready to get the horseback train together for work?
Yeah, absolutely, man. Of course, my height, I'd have to ride a Shetland pony, but other than that, I'll be in good shape.
No, Steve, you don't have to worry about that. Haven't you seen, the big races? Jockeys are,
That's true. That's true.
Oh my gosh. All right, Steve, well, switching over to you, we're going to talk a little bit about, when you're seeing prices strengthen right now, what changes operationally for exploration, for production, for companies like King operating? I mean, how do these prices kind of affect the operation side?
Well, the immediate effect really comes when on maybe certain types of operations like workovers and things that we may have been holding off on. Those are kind of immediate bang for our buck. Now, for the drilling and our long-term plans, they don't really change significantly because we are focused on moving forward with a plan with our partners. In a way, I mean, unless things really would crash, I mean, our long-term focus is on development. If a complete paradigm change were to shift, where we kind of go from of course, a $70 world, and it truly shifts into an $85 or $90 world going forward, then yeah, we're going to definitely have changes and pick up additional rigs. But right now, we're still focused on diligently, working with the capital that we have, and the long term that we see is still, we're still on track.
Okay. So is that kind of like the balance? Are you working on the balance of taking advantage of higher commodity prices while maintaining financial discipline? Is that
Exactly.
kind of the system you're in?
Yes, absolutely.
And Kelly probably does a lot of that for you as well.
Oh yeah, Kelly does an incredible job balancing that. And he's been doing an incredible job as far as with the the rig that we have running, and just the efficiencies that we're starting to realize, and on top of uh, you know uh, moving forward with our plan and actually being able to expedite it quicker because of the efficiencies that he's put in place.
Yeah. Well done, Kelly. Smiles. So, Steve, does the $80 environment change? Okay, I mean, I know some of the answer to this, but does it change how you're evaluating drilling opportunities? Are we sticking with the same long-term strategy, or is this modified what we're doing at all?
Well, we still always keep our eye on the market and on different opportunities. So I mean, it like I said, with a true paradigm shift, it would change our strategy. But our strategy as far as being disciplined, the way we're spending our capital and moving forward with the economics of that, it doesn't hugely change our focus, because like I said, our focus is to continue to develop and for the long term. So it's just like, I always consider it just like if you buy into a stock, if you don't look at it daily, I mean, you're investing in something, for future, and you stay on track. If you're always reacting to the low prices and to the high prices, you can get yourself in trouble.
Yeah. Well, our strategy is pretty straightforward. Drill, 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 sell half of everything you own. We're in the shoe business, somebody said.
Yeah, exactly.
That is exactly what we do. But Kelly, all right, Kelly, tell us, what does today's market mean for activity in the field? What do you guys, give us your side of things, boots on the ground. Not that Steve is not boots on the ground in the field, because I have heard a rumor that Steve may be in the field soon.
Yep, he was out there last week. Steve's been out there more.
Oh, Steve was out there last week. Look, and here I am saying that Steve is always in his office. Shame on me.
He was gallivanting around all last week. So
that's the fun side of the job. I wish I could get out more.
That's right. That's right. It's us making Kelly work. Kelly's got the putting the miles on the truck, shall we say, Kelly?
That I do.
All right, tell us what you're seeing out there.
Couches last year too. So,
how is the market today? I mean, how have things over the last 6 months? Does that change anything? Activity in the field? Are you seeing some differences in any of the vendors or pricing?
And it kind of goes what Steve said a minute ago: long-term planning. On the drilling side, specifically, there really has not been much change since the war, since the break over 100, the fall back to 70, and the current 80, around $80 pricing. There really hasn't been a lot of change in drilling activity. Most people pick up drilling rigs for a year to a year and a half at a time. I'd really like to say that as an industry, we were cranking up a bunch of rigs, but we haven't. It has, however, affected, like Steve said, also more kind of spot market things. Frac crew utilizations at a maximum. I told the guys on an operation call this morning, I can pull a drilling rig out of thin air in under 2 weeks. I cannot on a frac crew. So it takes some more planning. It's some more strategic timing to get everything right. The frac crews are a little tighter. And like Steve also said, workovers and things where you can bring a well back on, prices drop down to $60, $70. Bringing a 12 barrel a day well may not be all that advantageous or exciting, but you break 80 and approach back to 80 to 100, that gets picked up. So I talked to a friend of mine that does a lot of remediation, has a lot of whip stocks and things like that, remedial tools for workovers and wells. That market is flush. That's busy. And unfortunately, post COVID and all that, the staff, volume of staffers in companies is down. So equipment's utilized, and even people are even more stressed. So
it does take quite a bit of planning to get everything going, but we can still get anything we need any day of the week, pretty much.
Wow. Are you seeing that in all, kind of like across Texas and all different drilling areas? Same situation?
Yes, ma'am. We've talked a lot in previous meetings about the difference between oil pricing and gas pricing. Plays like the Haynesville that are super heavy on gas, not oil. They took a hit when gas dropped real far, but gas has been climbing steady and still on a differential, still, on a percentage wise, climbing pretty good. So gas plays are definitely holding in there right now, which makes me happy. I've always said I like to see the balance. I don't want all of us to focus on just gas or all of us just focused on just oil. So the fact that the oil plays out in Permian are doing good, the gas plays like the Haynesville are steady, and if not, and my East Texas friends, co-workers, and field personnel that I've worked with for the last 25 years, so they're staying busy in East Texas right now. And 2 years ago, Arclitect was kind of dead, so I'm glad that gas prices are up and utilization's up, and rig count in those areas is up.
So rig count is coming up. I mean, what are you seeing as far as rig count coming up?
I've been so busy doing my day to day, I haven't been all that update on it. A few rigs that I've shot for, I've got scooped up faster than I could make a decision on them, so that's good news. But there's really just not the big jump that you would think. Operators aren't doing the knee-jerk reaction to the price, so they're which also says too that we as an industry really focus on the long term and not the spot market cost. Kind of like Steve said, with focusing on your investments, long term, not just pick up a rig today, jump a rig tomorrow. There's a lot of money and a lot of capital, not just the rig itself, and picking up a new rig program. And I think the whole industry as a whole is just smarter and more cautious about it these days. So get their ducks in a row before they pick up a new rig, no matter what the price is.
Mm-hmm. Mm-hmm. Interesting. Okay, Kelly. Jay, I want to come back to you after that kind of conversation about rig count. It's come up a little bit. It's not come up a ton. What does that say to you? I mean, what is that a symptom of or a sign of?
Well, it could be several things. I think number one, companies are being very, very cautious about throwing a lot of capital, because it takes $100 million, $200 million for every rig every year. So it's not just an easy, turn a switch on and off on capital. You have to develop prospects. It takes a lot. I mean, Kelly is busy, and I just ask him sometimes if he's okay, because it's like there's so many different things going on right now, and I'm really excited about the opportunity. But we put a lot on Kelly when we do get a rig or two rigs or whatever, and it does take a lot. So I just think people are being cautious. Number one. Number two, I think there's a lot of companies out there that are really reevaluating the prospects or the acreage that they have. And, they might have drilled all their tier one or their best locations before, and they've consolidated with other companies. And so they maybe just look at these, locations and not sure, number one, were they as good as they thought they were? Number one. Number two, is it going to make them money? And if prices do stay at the $60, $70 a barrel, are they going to make money? They don't want to just trade hands, and put a rig out there and put up 10 million or 15 million or $20 million to drill a well and just make that money back. They want to make a profit. And so how do you do that and make sure that because public companies don't get tax benefits on their drilling of prospects, so they don't get that. So they don't spend all their money in the first quarter, of the year, or get it all in at the end of the year. It's like a different ball game with them. They have to make money, and that's why that's how we strategize our projects to where we're in the shoe business, and just like you said, Rachel, but sell half of everything. I think that's brilliant, because we are, and we want to make sure that we turn capital over. I mean, we're an oil and gas company, but that's a vehicle that we have to make our clients money, and we are constantly on the lookout for ways to do that. And that's why, we've talked to a few people that could really, make a big difference in our clients' lives. And we do the J unit sale at the end of the year. I mean, we're just doing things for the investors, and it just I'm really excited, and I'm really excited coming up the next week or so, because we're going to be putting up some wells online, and when we put wells online, it's going to be great. So next Tuesday, what Rachel was kind of hinting at with Steve, Steve and I are going to be on location next Tuesday, and we're going to be on the drilling rig on Tuesday at 2:00 Central. We'll be on a drilling rig going live, and then at 6:00 we're going to be on the completion rig, and talking live. So if you ever wanted to look at, because people always say, I wish I go to a rig. Well, hey, your chances here next Tuesday, on July 21st, we'll be there on a drilling rig on the 2:00, and then the completion rig at 6:00. So that's going to be really exciting, and I look forward to. I wish everybody could be there with us, but I know it's just kind of it's a 6-hour drive. I mean, it's not easy, So we're going to be listening to a lot of country and Western music.
There you go. It's a full Texas experience. Texas experience. Get your truck, get your hat. Oh, I make sure that Steve is wearing some sort of cowboy hat like Billy Bob.
There you go.
There we go.
Yeah.
Well,
Okay, I want to see it.
I'm gonna have Jay drive so I can sleep all the way. That's what I do.
It won't be 6 hours if Jay's driving. It won't be 6 hours if Jay's driving.
Perfect plan.
Hey, Kelly plays the best music though, man. Kelly's got he plays some great tunes, man. He gets going.
I'm usually the chauffeur. I am usually the chauffeur. Yep, and the DJ.
Yeah.
You need a good DJ on a road trip. It can be important.
Very much.
Okay, Jay, kind of thinking, what are some indicators you're watching over the next few weeks regarding energy, regarding either oil and gas, what's happening overseas, that investors should also be paying attention to?
I'd say if we're going to open up the Strait of Hormuz or not, we've already opened it up 100 times and closed it, and it's only half open, a third open. Who knows? I think what's the most important thing is looking at your portfolio and looking to see if you would like to participate in an oil and gas project. I'm not saying that just for us. I'm not saying if you do, you do. You don't, you don't. But I'm just saying it from a standpoint of I feel like that we're seeing a really good market right here. We've got some great projects. We got a great team. Our strategy is I'll put it up against anybody's. I mean, we studied the private equity model for years and years, so I'm excited about that, because that's how companies make money, and they didn't take the tax benefits. I mean, institutions, all that, they don't have tax benefits with their investment, and these private equity companies made them money, and they came back to see them. So just imagine having that extra, 40, 50%, whatever it is, increase in your returns because of the tax benefits and being there. So I'm excited about that. And I know I don't mean self-serving, Rachel. I'm sorry. I don't mean to sound like that, but I live the oil and gas business and I love it. And I really feel like it's a good time, to look at it for your portfolio, whether it's if it's a stock or if it's a investment with us, or if you're looking for somebody else. I mean, whatever it is, I think it's a good time for you to look at it, or increase your position or participate. So,
absolutely. Okay, Steve, what are you watching over the next month or so? What do you think is going to influence the energy markets? What are you watching?
Of course, we know the obvious, but other things we're going to look at is, with weather patterns the way they are, whether we have massive heat waves continue. That's going to definitely, help the markets there. And depending on, I've also seen things where, they're talking about that we may even have in some areas winter beginning in fall in some areas. So, weather patterns are definitely things that that will also affect it in the short term and locally for us. But again, the obvious one is going to be kind of with the unrest around the world, just kind of how that hammers out.
Nope. All right, Kelly, you're up. What are you watching?
We're just for us personally, we're gonna have a lot coming online the next couple weeks here. So we'll see big boost of production, performance of our investments. I'm focused on getting these wells turned around quickly. You know, we've been back in the mid-con for about 2.5 months now. It's just time to get these first wells on. King hasn't had some new players out here in 4 years or so, so I'm super excited to see how that changes for us. And really, Jay's vision with a rig through the end of the year and ramping up to 2 before year's end, just kind of getting to see the fruits of that labor, and both our projects up in the Panhandle. So I'm real excited about that and how that affects us, the company, and time that with better oil prices couldn't be better. So nothing better than drilling when it's cheap and turn them on when it's prices, you know, buy low, sell high kind of thing. So I'm real excited for that right now.
Absolutely. Absolutely. I couldn't agree more. Of course, we're all keeping our eye on what's happening around the world, what's happening in the Middle East, what's happening with strategic reserves and prices of commodities and all of those things. And of course, I'm watching these guys. I'm watching them. As Kelly mentioned, we've got production coming online. We have incredible assets in our portfolio. We've got a lot of interest from, you know, outside companies taking a look at what we're doing. And as Jay said, it's exactly what we do at King Operating. And we'd love to share more with you about that at kingoperating.com. You can go, you can do click down, hit the learn more about us, because as Jay mentioned, 30 years in the oil and gas industry, what he learned from all of that, what he learned from watching his family, and what came out of that was a unique model in oil and gas to really put investors first, to provide not just incredible tax deductions, but a model similar to private equity. We're actually investing in a private deal that is scaling, that is growing, that is building, and that is going to have an exit. Of course, providing great monthly distributions for our partners. But if that's something that you have been looking for, you don't own any commodities, maybe you don't have any oil and gas in your portfolio, I would say now is absolutely the time to take a look at our deal. Because as we mentioned, supply, demand, is so much need for oil and gas production within this country that the longevity of energy is definitely on the rise. And if you do already have oil and gas in your portfolio, I can promise you we are different, and we would love to explain how we're different and how we can add value to what you're doing. So definitely go to kingoperating.com. Let's connect. Let's have a conversation. We would love to learn more about you and just share with you how we are actually building these deals out and how the shoe business works in oil and gas. So definitely connect with us. All right, gentlemen, any last words for today?
Drill, baby, drill.
Hey,
Drill,
there you
baby,
go.
drill.
There you
Pay
go.
attention.
Absolutely.
Pay attention. Here we go. We're getting ready to start fracking wells.
That's
We're gonna start having
right.
some
That's
money come
right.
back, so I'm excited about this.
We're going to have some great production online. Make sure you're following us as well on all of our social media channels, whether that's King Operating or the Jay Young Show, also on LinkedIn, YouTube. You will see us there. You'll get to probably see some great footage. Kelly, you going to get us some great footage?
Yep, always.
Absolutely. And then we got Jay and Steve out of the wells. We got a lot coming up in the next weeks that we're excited about. So make sure you connect with us. We'll see you back here next Wednesday, same time. Thank you, gentlemen, and thank you, everybody, for joining us today.
Thank you, Rachel.